Hi, everyone. Ryan Maggio here, Vice President of Sales with Xactly. This is our Sales Hacks episode. It's been a few weeks since we've done one of these via our LinkedIn Live. I'm actually joined today by two great CEOs, Grant from Planful, Chris Cabrera from Xactly. Grant, you want to give a quick introduction before we get into it?
Yeah. Hi, everyone out there live. Thanks, Ryan. Thanks, Chris, for having me on. So Grant Halloran, CEO of Planful. We're a SaaS company that helps businesses drive maximum financial performance, planning, reporting, operational planning. So a lot of synergies with Xactly and connections with what you guys are doing. I'm excited to be here today. So thank you.
Yeah. Glad you could join, you guys. Congrats on all the success. It's a great company.
Thank you.
And we love the partnership.
And then everyone knows Chris, our CEO. We're actually live in the Planful office. So as we've gone through these different sales hacks, keep in mind these are designed for sales leaders, sales reps. How can you be better in your career? How can you start thinking about the future? Today, we're going to go a little bit of a different topic with two CEOs. We're going to go into the state of the economy and really focusing on the growth at all costs and how that model is kind of dying off and what CEOs are thinking about. So as you go in selling, your different softwares, your whatever it may be from an IT, sales, finance perspective, what can you do to get into the mindset of a C-level executive? So first question, I think goes without saying, the growth at all costs model is dead. And Chris, I'll do this first one to you. What are your thoughts on that? What goes through your mind? How are you approaching it from a senior staff level down to the grassroots individual contributor?
Yeah, I mean, there's a lot to unpack there. So maybe I'll just start off. I think, growing up in the Silicon Valley and, seeing the whole SaaS thing come to life and, in the early 2000s, everything was always growth. I started the company in 2005, and as we raised our A round and our B round and our C rounds and saw the people around, I mean, it was the whole unicorn thing. Everyone's, just trying to get $1 billion valuation on our revenue. It was all a multiple of revenue. And even though I had gone to business school and I'd gotten an entrepreneurial degree, and I thought that, we built companies to make money, no one was ever asking me to make any money. That word, EBITDA never even left my mouth, for the first 15 years of building the company. It was just all growth at all costs. And I understood that, and that was kind of the game. And we've gone through this, just in my career, this is probably the third or maybe third and a half of these downturns. This one feels different. And so these downturns sometimes cause these pendulums in thinking and whatnot. And certainly this one, there's this pendulum that seems to have swung away from growth toward EBITDA. And I don't think it's a fad. I don't think this is one of those pendulum swings that's going to swing back when the economy, returns. Because I think businesses and business leaders are figuring out that there's a better balance, like that being on one end of the spectrum where it's growth at all costs and zero profitability is probably not healthy, and being on the other end where you have zero growth and only profitability is probably not healthy either.
Yeah, well, I mean, I think it's funny. You mentioned the word unicorn, and we've always talked about these companies that unicorn valuation, like unicorns, I mean, unless I'm wrong, aren't real. And it's kind of that foreshadowing, like if you take a look back, is that something that was true? I mean, granted, Chris said a lot. I mean, what are some of the things that go through your mind? What are some objectives that you have, goals as a CEO? I mean, Chris has a perspective as a founder. You came into Planful, after the acquisition by Vector. Yeah. What goes through your mind in growing your company?
Yeah, so, I think one of the words Chris used there was balance. And I think that's where we're at today. It's a little nuanced based on where you're at in your life cycle as well, right? So if you're an earlier stage company, we're application SaaS business leaders, right? So that's probably the space we know the best. So if you're a SaaS company earlier stage, your focus right now is extending the cash runway that you have until your next round. Mm-hmm. Okay, it's probably going to be difficult for you to be profitable, but you need to extend that. Maybe you were thinking your next round is 9 months, 15 months away. Probably need to be 24, 30 months of cash runway. So you may have adjusted your expectations of growth this year from 120% down to 70. Still like ridiculous growth, but they're not going to be rewarded for going all out at 120 right now because it's too risky. You're going to get a down round. that is messy for everybody. So you're trying to avoid that. In our business, we're much more about profitable growth. So, we tend to focus on, what everyone in our industry calls rule of 40 or rule of 50, even better. So trying to balance some sort of growth with profitability, that is something that's very attractive to investors today. So that's where we're at. If you're a larger company at scale, you're probably very much about EBITDA growth, as Chris mentioned.
Yeah, I mean, I think that's a lot of what it is. It's tying into what's happening, as some of my sellers, right? They get so myopically focused on, I have to hit my quota, I have to hit my quota, I have to hit my quota. They're not taking that step back, asking, what's driving this initiative? What's happening at the company that my software can help that CEO or that CFO with? So I think it's something that sellers need to pivot a little bit on in their sales motions, because it's not so focused on just getting the deal done.
Mm-hmm.
I think that's a good point. And just to kind of pivot to speak directly to those sales people that are out there, I think there's lessons that can be learned on this whole balance story. And I know, what frustrates me to no end is seeing, reps that are early in their careers and they're chasing these, unicorn deals or big deal or home run deal, and which is fine. Like, you need that. But when inevitably it falls through, and usually in the last hours of the quarter or year, they're left with nothing, right? And so what I don't understand, and what I try to beat into people's heads is balance is important, right? Chase that big deal, but you better have some singles and doubles and triples in your portfolio, because when that big one does slip or push out, you got to have something to fall back on. And I think reps are just too myopically focused, like you said, on on one or two deals, thinking that that's going to be their haymaker. And if it works out, you're a hero. But a lot of times, as we know, you can't predict the closure of these, and especially in a climate like we have right now, where if somebody sneezes, a deal can push out a month or a quarter or even longer.
Yeah, and I think this is a great transition to kind of my second question, Grant. What do you think? Successful companies will start paying even more attention to forecasting accuracy.
Mm-hmm.
So what goes through your mind? What is Planful doing? How are you educating your sales team? Because it's both to the sales team as well as to the buyer.
Yeah.
So
I would say that where we sit today is we're pretty awesome at forecasting, but we weren't always that way. It's a bit of a journey. Our philosophy is to triangulate multiple methods, right? So we have the classic kind of roll up from sales, they've got their commits and everything else. And that's one dimension we're always going to look at and take their judgment seriously. The other is just, straight out algorithm based on historical data. So message to the audience here is, this is all about CRM hygiene and having enough data to be able to then use your own algorithms, or in our case, we're a client of Xactly, we use the AI-driven sales forecasting as well, which is the third method. But if you don't have good data, so this is one message I was very keen to put out there today, is for reps and sales managers, CROs, even CEOs. Everything comes back to your data. If you have bad data infrastructure and you don't have clean, good hygiene with your CRM, a lot of this forecasting is useless.
Right.
And this is just not a time to be bad at forecasting. So build up that data, make sure you've got it there, understand what those underlying drivers are, and invest in the technology that's going to help you. The second point I'd make here is that it's not just accuracy, it's frequency. So you can't just sit around and wait for the end of the month and go, hey, let's do a monthly review. You need to be looking at least your sales forecast and spending quite a bit of time. We spend hours on this topic every week. And on a daily basis, we're looking at the actual operating information that's coming to us. How's the SDR team doing? What leads are coming in? What's the effectiveness of the different channels for marketing, for generating pipeline? So, yeah, I think that it's really a data and analytics issue, and that I just really encourage people to make sure that you're investing behind that if you're not already.
yeah, and I think that when you put a system behind that, one of the things I've learned over the course of my years is everybody looks at data differently, right? How you look at data, how Chris looks, and we're all going in and we're looking at different elements of the data. The key piece is it's relying upon what people are inputting. So how do we go in and make sure that, reps are logging their emails to Salesforce, right? One of my biggest pet peeves is I go and look at an opportunity and say, well, where's the activity? Oh, well, I was texting with them, or I called them on my cell phone. It's like, okay, so take that one extra step, log that call, log that activity, because we have to know it's not a big brother, hey, what are you doing? It's how can we help you?
Well, engagement, that's a form of engagement, and engagement is one of the most predictive factors in forecasting, right? If an opportunity is being engaged both ways, it's much more likely to close than if there is a lack of engagement. And I believe the algorithms, can pick up on frequency of engagement as well. So yeah, it's very, very important. Just final point I want to make here is sales forecasting and financial forecasting is a team sport. And, all the reps, all the managers out there, if you think that the hygiene that we're asking for is just driven by, us wanting to be big brother or whatever, it's not at all. I know in my company, we are working really hard at corporate to help our field win. We work really hard. We invest millions of dollars every year to help generate pipeline for them. We need you guys to help us with the hygiene so we can then navigate a pretty foggy environment right now. There's
Absolutely.
a lot of uncertainty. And if the hygiene's not good, then what ends up, we can end up making bad decisions.
Right.
And so we need the help of the team. It's not just to be big brother. It's actually helping us drive good decisions in the business.
And for all those that are watching, please, this is supposed to be an engagement session. It's not just the three of us chatting. If there are questions, comments, concerns that you have, please feel free to put them in the chat as well. And we can address those. Chris, I don't know on the forecasting accuracy and what your thoughts are behind that.
Well, I think that this whole thing on forecasting, I think just like a minute ago, I was kind of speaking to the sales reps and talking about balancing the portfolio. If I was speaking to CEOs or heads of sales, I think this is an area where we're falling down as leaders. Because I think for many, many, many years, and certainly almost my entire career, forecasting was more of an art, a dark art that was performed by heads of sales. And the heads of sales, and I was one of them. We would kind of do this and do a whole bunch of things. And
clipboard. There was a clipboard.
I had a clipboard. I used to walk around.
Billy's a sandbagger.
I literally was known for
You would see him come out of his office, and if you made eye contact, that was like, you have to know you can't do that because he's going to come over and ask.
Personality. Yeah. Sally's got happy years. Billy's
That's right. And look, it worked for a period of time, and that because that's what the tools that were available, right? But I think shame on anyone who's doing that today, because the world has moved on. The data is available. To your point, the AI models are getting smarter and smarter. And so if you are still thinking about, there's two parts to this, I think. One is if you're not recognizing the value of all this data that's being collected and how predictive it can be, that's a huge problem. But also if you think of forecasting in your head as this siloed activity separate from coaching, for example, or separate from many other parts of the selling cycle, then you're not understanding how technology is moving, right? Because these tools today can not only use this incredible data and these machines that see patterns that we as humans can't recognize, but they can tell the reps that. It's like they literally say to the rep, hey, this Acme widget deal that you're claiming is going to close, the computers are saying it doesn't match the pattern of the deal that's going to close, and here's why. So go fix these things. Yeah. And so as a rep, all of a sudden I have some actionable things that I can go actually do to fix it. So it becomes almost like a training element to it as well. And I just think it boggles my mind today when I talk to people, CEOs, and thank you for being a customer, but CEOs, unlike yourself, that are still kind of doing it the old-fashioned way, or heads of sales that they think that this is some pride thing that they have, and they're just completely missing the boat. And I think they won't be around to see heads of sales for very long.
Yeah, and I think one of the things too is you want to make sure though, as a sales leader, if you're reps or if you're using a tool like, let's just say Xactly forecasting, it's not just going into the tool. It's opening up that olive branch for the communication back down to the rep. What's actually happening in this deal? To your point, this is what the AI is saying. Let's talk about how do we change that? Because an AI is evolving. It's never a static object. So as you get more data, as you have more engagement, you're having better conversations, there's conversational analysis tools. All that plays into it. So it's taking the sales leader to go in and really talk more to their reps.
I think it's more efficient for the sales leader too, because when I go inside the tool, I can see these CRM scores, right? And I can see the red and yellow. And so if you're a sales leader, you can say, look, I've got a rep that's really confident on this deal, but this is not scoring very well by the system. So it just gives me a shortcut to prompt.
It's like you said earlier, it's like you don't rely on one data source.
Yeah.
It just gives you another.
I can just ask a question, like, why is there disparity? Yeah. Like, you're super confident it's going to close in 2 weeks.
And they may be right.
Right.
But why not, at least have this other check or balance to say, hey, well, the system's not thinking the same as you. So let's just check it out. If it's wrong, great. Yeah. Let's move on. Exactly. And the system will learn. Yeah. So it's really powerful.
Yeah. So we've talked a lot about the sales rep. I mean, what about from a financial IQ perspective? What's happening, from a focus on that? Are you increasing it? How are you getting smarter from an executive level on what's actually driving the business from a finance perspective?
Yeah, financial IQ is a term that we use a lot at Planful. And a lot of it is about just moving beyond, going back to our first topic here around growth at all costs, right? 18 months ago, if your ARR was growing really quickly, the one metric you were talking about was your annual percentage rate of growth, right? That was it. Like, that was the financial IQ, and nobody really asked anything else. Oh, you're growing at 100%. That's awesome, right? Keep going. When's the next round, and what will the valuation be?
Yeah.
So these days, it's different because we have to look at these underlying metrics. Sales productivity is now so much more important. We're looking at things like, how balanced is our rep performance? If we're operating in multiple segments, like our company does, we need to understand the unit economics of each of those segments. What's the LTV to CAC versus for mid-market versus enterprise, right? So we're looking at a whole range of deeper level metrics today with a lot more intensity than we ever have. Linearity, for instance, is highly predictive of, if you have strong linearity, that is highly predictive that you'll make your numbers for the quarter, that we found. I'm not sure it's the case with every business, but we found if we have strong linearity, we're in a really good place. So these are deeper level metrics that a lot of folks haven't really had to lean into, and now they have to do that. Now, let me put a positive spin on this. These cycles, we're in a fear cycle right now. The economy tends to operate in cycles, right? We're in a big greed cycle for quite some time. Now we're into a fear cycle. This feels more conventional, to your point earlier, right? We had the pandemic-driven one. Right. We had 9/11 back in the day, right? So this feels like more traditional. We've got a systemic problem with inflation, with the Fed's doing these crazy rate rises. We don't know what the cap's going to be. It's starting to get a little clearer, but it's still uncertain. So what we need to do is build a stronger company out of that. And I actually, to put the positive spin, think that companies that can operate really intelligently through this period are going to emerge stronger through this period. Hopefully by the end of 23, I'm kind of optimistic a lot of the measures that the Fed's taking, the federal government's taking, whatnot, are going to work. You're going to be a stronger company coming out of this, stronger financial IQ, understanding of all these deeper level metrics. And when you go to your next round, trust me, if you're that business that needs new funding, investors are going to be scrutinizing you like there's no tomorrow on these sorts of metrics.
Yeah, I couldn't agree more. And I think it's what's interesting is we work like yourself with a lot of great companies, and sure, it's tough right now. Sure, deals are pushing. We certainly see the same thing everyone else is seeing, but we do see a lot of companies that are doing projects right now because they kind of realize, look, this is the time to do it, right? Everybody's missing numbers. Everybody's, having a tough time. This is the time to focus on that internal stuff, get your numbers right. And I know we're doing some great stuff with joint customers that are using Planful to do some of this data stuff that you're talking about, and, merge it all together and have that visibility so that when the sun comes out, hopefully soon, and we're optimistic that it will come out, second half of next year, kind of time frame. Get these projects behind you so that you're ready to rock and roll when things start to pick up again. Because when they do, my experience and what I think is going to happen, it's going to come back, fast. And then it's going to be too late to try to do some of these projects and and get your house in order.
I would say let's have a drink on that, because the coming back fast and strong would be.
Well, I'm an optimist, you know. So.
We're realistic optimism, right? But
Yeah.
the final point I make on this is that, you know, you've got only a few levers that you can pull right now, right? You've got capital, and that's precious, so you want to retain as much of that as you can. You got people, and you got technology. These are the three ways in which you can drive significant improvement to your business. Everyone's watching people goss, right? You know, we don't need to remind everyone in the audience, like it's a tough time out there, especially in the tech sector. So you got to look at technology. It's really the most cost-effective way to drive way more productivity into your business. This is just, you know, no one can convince me otherwise. You look at the ROI from technology investments, you build the resiliency of your systems, you build that infrastructure, we like to call it, that can actually drive all of this. You can end up with 20% more productivity by the end of this year than you otherwise would have had. So this is the time to build that resilience and those systems. And then once we get back to that new greed cycle again, you're going to be a much stronger company.
Yeah. Going in, I know we only have a few minutes left. Maybe Chris, for this, the real-time information and ability to course correct will increase the importance of the actual forecast. What are your thoughts on the course correct? I'm more focused on the course correction standpoint.
Well, I think what you're talking about is sort of what I was alluding to earlier, which is the idea that getting a forecast accuracy system and getting more accurate forecasts is clearly an important thing, especially, you know, having some predictability in a crazy uncertain time like this. But more important is getting it early enough in the quarter such that you can change the outcome, right? A lot of these forecasts, the way people do it, it's the war rooms at the end of the quarter. Oh, you know, we're going to do one every day for the last 2 weeks, and it's this mad, crazy, you know, rush to try to see what's going to end up closing, and you're kind of robbing Peter to pay Paul over here, figuring out deals and what you're going to discount and all this crazy stuff. Why is that happening at the last 2 weeks of the quarter? Why aren't you knowing that early in the quarter what's going to happen? And if you have the right tools that have that visibility, like I said, gave the example of how the tool can help a rep course correct on an individual deal. Well, on a higher level, the same holds true for the business, right? If the business is able to look holistically at the geography or, you know, the worldwide forecast early enough and compare that to historic quarters and be able to make changes, then you can affect the outcome in a more positive way. So I think that's probably what you're.
Yeah, and I think it goes to what you've told me for years now, which is kind of that show me, coach me, tell me type of mantra of let's lead reps more to water and teach you like to say teach a rep how to fish, don't fish for them, which then in turn I think gets that importance of how do you course correct, right? Because it's not just from a people, you know, in a conference room doing a war room. You got to get the feet on the street to start thinking about how do I course correct earlier in the quarter. When you get your account plan or you get that quota, you're looking, okay, how do I go close X amount of business? I have to have a plan of attack. And that's where I think forecasting and having intelligent revenue really comes into play, because you can start mapping out your plan and then you can execute on that plan. And then you have the sales leadership, you have technology, to your point, Grant, about being able to go in and make educated decisions. Where should we go focus on? Do we need to go have marketing put importance in our SMB growth segment because we see it's quicker deal cycles? We can really get
fast moving pipeline.
Right.
So it's probably the best if you still think you can make your number, because to Chris's point, like if your prediction early on in the quarter is that we're going to be, 11% short of plan. If you're operating in a business where you sell into mid-market segments, for instance, you can generate fast-moving pipe. So that's your course correction right there. You're not going to go cut. What you're going to do is you're going to ask marketing to help, hey, dial up some more program spend right now that can get us fast-moving pipe that could close.
I mean, that's the beauty of leadership, right? Is you have a bunch of dials that you can turn, but if you don't find out early enough that you need to turn those dials, exactly, it's too little too late, right? And so to your point, if you learn early in the quarter, whatever it might be, right, depending on and it's different for every business, there's lots of levers that CEOs can do to make the quarter still a success for the business, but knowing what that forecast is going to be early on is
Yeah.
super important.
You have to have a culture of transparency.
Yeah.
Like, and this sort of we're all in this together mentality, because it is foggy out there. And so if the sales folks are off saying, look, the culture of the company is that sales doesn't want to tell finance and the CEO that, we've got a problem here, you're gonna really struggle, right? So you got to have this transparency, and I try to do this myself. It's not that easy, but just be real with your people. Like, we're all in this together. We're all operating in a very challenging economy. So we're here to help you guys in the field. You guys help us. We'll make better decisions together if we're all transparent.
Yeah, we did a SKO, Chris, you may remember this a few years ago. We did the sales versus finance video. I think it's on our YouTube. And it's funny because even in this realm today, sometimes it feels like that, right? You have sales versus finance, and it's like, no, everyone needs to kind of
Partnership.
It's a partnership.
Yeah.
This isn't one group out to get the other. Like, we all have to work together. We're in business together.
Well, FP&A, people think it stands for financial planning and analysis, but we think it's financial partners and advisors.
Oh,
Right? Like, you're here to help the organization grow and achieve its goals.
yeah. I mean, it's definitely it's something that's changed, and I think COVID played a little bit part of that, because you have a whole bunch of teams that have never worked in an office together, and so how do you go and bridge that? Well, the one way you can do that is start having conversations about what the data is saying.
I know you're running low on time,
Yeah.
but just you touched on one of my hot buttons. I know it's not part of this script, but I can't leave it alone. So this, I think one of the things that I would want people to take away from this discussion too is a lot of companies have tools. They've made investments in tools, but they're not even using them the way they should be, right? And I think another thing that leaders should be doing is ensuring that the tools they have are being utilized correctly. Like, would you believe we sell compensation automation? I think you all know that from Xactly. That's our main thing we're known for. But one of the biggest pieces of compensation is the dangling carrot, right? Is showing the rep how, through their iPad or their iPhone or whatever, how they're doing so they could drive a better performance. And we have some customers that, like, they buy our tool and they don't give access to the rep. And it's almost like an intelligence test. I won't name any names because I'll get in trouble, but like, that's just insane to me that you would buy a tool and then the thing that makes that tool really work, not use it. And I'll give you one last example because it touched on the fish thing you talked about. We are a great customer of ZoomInfo. They're a great customer of ours, and we use Chorus. We record all our calls, and I listen a lot to the calls that our reps do, and I get so frustrated with our first line managers, and I share this with a lot of CEOs, and they have the same issues because these managers are taking over the call. It's like if I get on a call with you and I just take over and I start doing all the talking like I'm doing now.
No.
What are you learning, right? And so I just would implore young leaders, teach them how to fish, let them go make mistakes. You shut your mouth, and then you coach them afterward with the tool. You have the recorded call. You have to avoid the desire to jump in and answer every question when you're and so it's just a commentary on not using tools appropriately.
Yeah, I mean, we're not brain surgeons. Nobody's gonna die on these calls if a rep misses a question or whatever that may be. But I think one of the things you touched on, and Grant, I know this is totally off script, but one of the things I've been talking with my reps about is next year we have to focus on the customers. What are they doing? How are we making sure that they're using our products to the fullest extent, that they're happy, that they're referenceable? Like, it's almost like a big thing for my reps that are probably watching right now for our SKO in a few weeks is getting back to basics of selling. Going in, you get a lead, you make sure you understand what makes that customer tick. There was a rep that she's actually at a different company now running sales enablement. And we would always joke she'd be invited to their wedding, the customer's wedding, because she built a relationship. She understands what made them tick. And then you have customers, that's a great source of revenue to help, that quick actionable revenue. But we just call them when we need something. We're not there for the bad time. I don't know if you guys are seeing that in your business or your approach on that.
I've always had this philosophy. The beauty of the software as a service business model is it's a recurring revenue model. So we get outsized valuations because we get compounding revenues. We can generate outrageous amounts of cash once you get to scale. But that comes with recurring nature of it comes with a relationship. You're not creating a sale here. You're not making a sale. You're establishing a relationship, and all relationships are built on trust. And that's what we do, I think, very well here. I think we have an amazing sales organization. Shout out to you, all you guys and the team. They really genuinely believe that they're doing something great for their client, and those businesses are going to run better, and they're going to then be better for their communities and their employees and society at large. So we have a very strong connection between what we're doing on a day-to-day basis and the sort of ultimate purpose of why we exist. So yeah, it's create relationships is the mentality.
Yeah. I know we have a few minutes left. We'll go maybe quickly on the last one here. And this is one, as a seller, I always thought, all revenue is good revenue. So the mindset, all revenue is good revenue, do you think it's going to be rejected, changed by the C-level suite? What's your thoughts on that?
It ought to be. It ought to be, because I'll just comment for our business. We operate in different segments, and we have fairly discrete segmentation. We organize our business around those segments, and they're not all created equal, right? The way in which you drive, like the sales cycle length, the expected churn rates out of that customer segment and whatnot, they're all a little bit different. So, you need to understand our key metric is the LTV to CAC, right? The lifetime value to cost of acquisition. And it differs between segment, and also it can differ a little bit depending on the distribution method. Is it direct? Is it through a channel partner, etc.? So we look at those very, very carefully. And at the end of the day, when you're investors and cash is super precious, it always is, but more so right now, you need to be making better decisions around the segments you're going to go after. What parts of the business are we going to invest a bit more in? Which ones right now are we going to invest a little less in, that are going to drive ultimately better economics for the company? And this is it's super important, because back to the point, you need to be really strong and resilient to thrive in this economy.
Yeah. Chris?
Yeah,
better say all revenue is good revenue. Right.
Yeah, this is I think we did a podcast on this pretty recently, talking about intelligent revenue and the different differences. I won't repeat all that. You can go back and look at it, but I think this goes back to what you said at the very outset, which is it's a little bit stage dependent, right? So like I'm on an advisor to a number of young entrepreneurs, and as well as more seasoned ones. But when I'm talking to some of these smaller companies that are, pre-A, right? At that, the answer is, I'll get whatever you can get, right? And I get these,
find what works.
I get these CEOs that call me with the deal, and they're all worried about the payment terms or this or that. I'm like, are you effing kidding me? Take that deal. Like, you don't even have 5 customers. I don't care what the terms are. Say yes, like do that deal, right? Because that's the stage that they're in, right? As you mature and you get bigger, and it ties to your other point about having the data to answer the questions that you were talking about. Most companies, they can't even tell you what their lifetime value to CAC is. Like, they can tell you that that's important, but they certainly couldn't tell you it by product line, right? Or group. And so that's an example of kind of driving blind. To the extent that you have data and you're using systems like Planful to know that information, and then you can make those decisions. Then the question is, now you're getting into a size of company that really should recognize that all revenue is not created equal, and that, $100K ARR deal, that's a 1-year deal with no contractual renewal or increase in the price, is not that great of a deal, because you got to keep reselling that deal and sing for your dinner over and over and over. When we started this business, SaaS wasn't even around, right? It was 2005. The only SaaS company there was Salesforce. We didn't even understand that there was a thing called renewals. 2 years into the business, like the ARR snowball kept getting smaller. I was like, what is going on? It's like, oh, well, they're not renewing. I'm like, well, what the hell? We got to sell them again.
There were SaaS companies in Australia. I started my first SaaS company in 1997.
Is that right?
Yeah, then the lawyers didn't know what I was talking about. It's a server. It's like, where's the software? Like, it's on the server. It's a service we're providing.
It's all around you.
It took a while to create an actual contract that made sense. But
you were ahead of everybody.
We didn't know what it was called then. Yeah.
Oh man. So last question. Go-to-market teams are going to be focused on quality over quantity. What are your thoughts? Like, what if you're talking to a first-time sales leader or somebody who's an emerging company, whatever that may be? What's your advice for them today? Quality over quantity, either one.
Okay, Chris.
Well, I mean, again, I guess it's an extension of what we're just talking about. I would answer it's stage dependent. Low quality deals when you're A round or pre-A, doesn't matter because you're just trying to get revenue on the books. As you get more mature, the quality has to be the primary focus because as I was starting to say, like when we started the company, we didn't understand the renewal piece and we were signing only 1-year deals. So every year, 100% of the base would come up for renewal. And years ago, we kind of changed that and we started focusing on multi-year contracts, no duh, it seems so obvious, but we weren't focused on it and we weren't paying the reps on it. So the reps, guess what? They weren't doing it. Once we started focusing on it, like this year, we're just ending our fiscal year, but starting next month in February, we have 30% of our business up for renewal, right? Which is great. I mean, 70% is not up for renewal. Doesn't mean we don't care about them, that we care about them any less. It just means, usually it's that renewal is the point at which the customer has an opportunity to renegotiate or look at competitors or give you a hard time, those kind of things. The more that you can minimize that as a CEO, the easier your job and your life's going to be, and the happier the customers are going to be because you don't want to keep doing this every year. And so that to me is a quality metric, right? If you're doing that 100K deal, it's a 1-year deal with no price increases. That's not a great deal. If that same deal comes in and there's a 5-year deal with 5 or 8 or 9% increases per year, given the way the world is today, that's a much better deal, right?
Yeah.
And so that's an example of what I think you're talking about in terms of quality. We could go on all day. We could do a whole podcast on this. I mean, from a legal standpoint, we rank every single deal A, B, C, D, and it's a constant effort to get rid of the C's and D's and only sign A's and B's. But again, it's not going to happen. Every once in a while, you're going to get that C deal that you kind of have to sign up for. But it goes back to that portfolio mentality, right? As long as that's not every deal and it's kind of like the exception, not the rule, then you're going to make that exception based on looking at the overall business.
Yeah. The only thing I'd add to that is that if we just sort of open the lens a little bit, when I think of quality, I think a big emphasis right now in software companies needs to be on product. And what I like to talk about is do it with pride, right? Are you proud of what you're creating? We do monthly releases here at Planful. Wasn't always the way. So we're constantly, like our product is hyper dynamic. There's stuff coming out every month for people. And we just want that to be super high quality. It makes sales, folks' job a heck of a lot easier if people are experiencing amazing product. And you've got to have other customers talking and being a fan of your business. If you're not tapped into that right now, that's going to hold you back a little bit. So really lean into good product and making sure your customers are really singing your praises.
Yeah, I think the brand piece is a key thing, right? Because the best advocate that you can have is a customer. And
so I have a final question for you.
Oh, okay.
Okay, Eagles 49ers.
Oh, that's an easy question.
We're doing predictions. So, okay, what's the score?
The score? Oh, man. I would say
There's going to be a lot of offense on this game.
Yeah, I think it's going to be like 38, 31 Niners. I'm a diehard Niners fan.
Oh, wow.
All right, shout out to we have some.
So you're definitely going the points over for sure.
Yeah.
Chris?
I'm right there with him. I think it's going to be a great game. I think the Niners are going to win. I think it's going to be a high scoring game. I think the defense that they're going to face is not going to be as strong as it was last week. So I think that's going to result in some scoring.
I'll take a slightly contrarian view. I'll go. It's a hardcore defensive game. 16-13, Niners win.
See, nobody likes to bet the under. I'm not an undertaker. I like a high scoring game. I want to be entertained.
Let's see if our predictions.
Yeah. I'll bet you a bottle of Cabrera wine on it. So.
Okay, you got it. Okay.
Perfect.
All right. Well, this concludes our episode for today. We're going to be having another one in about 4 weeks. So look forward to seeing you all then. Grant, Chris, thank you so much for taking time. I know you guys are busy guys. So really appreciate it. And thanks for all of you for attending. Till next time.
Thank you.
Cool. Thanks.
Thanks.